Hello, everyone. I'm Sabrine Khan. I'm one of the co-founders of HerCapital, and we're so excited to have you join us today. If you're new to the platform, we are a nonprofit and community organization with the mission to empower women and educate them on personal finance. So today we're very excited to have Katie, who is joining us from Public. I will let her introduce herself in a couple of minutes, but before we do that, just wanted to share a little bit more about HerCapital and also introduce you to my co-founder, Rabia. So if you look below and you're new to our platform and haven't yet followed us on social media or seen our website, take a look at the links in the description box and you'll see all about HerCapital along with our website, which houses our online knowledge base as well as our Instagram and Twitter. So we'd love for you guys to hit follow and you can continue hearing from us. And then I'd also like to introduce you to Rabia. I'll turn it over to her so she can quickly give an intro and then she'll turn it over to Katie.
Awesome. Thanks, Sabrine. And thank you everyone for being here and for joining us. Super excited to have Katie here and to be partnering with Public. So thank you, Katie. As Sabrine mentioned, we'll let Katie introduce herself and also introduce Public, which is a social investing platform. As Sabrine mentioned, obviously there's links below in the description so you can follow us and you can learn more about HerCapital. The other thing that I'd like to mention today is that you can ask Q&As throughout the event. We're trying to make this more of a workshop style. So Katie will be watching the comments, and if you have any questions, you can ask along. And obviously we'll also have time for Q&A at the end as we usually do. So with that, Katie, I'll pass over to you. Thanks again for being here with us today.
Awesome. Thank you guys so much. Thanks for having me. Really, really pumped to talk to everyone. Feel free to say hey in the chat where you're from. And also, like, as we go, drop your questions. We can stop and address those. Let's make this super interactive and fun. And with that, we'll get rolling. So I am Katie. Katie Perry is my name. It's my actual name, which is, good and bad. But I'm the VP of marketing for public.com. I'll get into a little bit about what we are and show you the app in a bit. But at a high level, it's a social investing app. So it's a place where you can invest, but also talk about businesses and investing trends and grow your education in a really collaborative and fun environment. My background, I've worked at ad agencies, I've worked at startups, I've worked for myself. I've worked at public companies, so kind of a mixed bag. I really joined Public because I loved the product and I really, really fell in love with the mission and feel like it's something that's really important and it's something I'm personally passionate about. And I always love to show my most used emojis, which in these times are, an assorted mix of things. But I hope everyone is, staying safe and healthy. And with that, let's get to it. So like I said, public.com, it's a social investing app. If you look at these screenshots, this probably doesn't look like how you might picture an investing app. We're kind of rewriting a playbook and making the stock market inclusive, educational, and fun. And so in a little bit, I'll show all the key features for you guys. There's again that link, I think, on the YouTube page that will start you off with some free stock to test out the app with some money on us. But before we dive into that, I want to kind of have a more higher level conversation about the stock market and kind of demystify some of the things you might think about the stock market that might no longer be true. So again, in the next 40 or so minutes, I'll try to keep a lot of time at the end for questions. This isn't direct investing advice. I'm not a financial advisor. So all the examples here are just kind of directional, but I am going to share some basic concepts, news you can use. I'm going to demo the app and take your questions along the way. But before we get into all of that, obviously the elephant in the room, this is a really tough year economically for a lot of people. And so when we talk about investing, I think a lot of times people think, that's not even in my realm of possibility right now. And so we want to be considerate of kind of where everyone's at. And so the idea today is an educational kind of overview of the stock market. I'm going to show you guys how Public makes it easy to start with even a little amount of money so you can learn as you go without necessarily putting in more money than you can afford right now. But I always think it's important to kind of talk about this before diving in because it is a tough time, or depending on where you are, in life, you might have just graduated, you might have student loans. It can be a lot to balance. So the purpose here is to demystify and make the stock market a little less scary. But before even getting into that, obviously, I want to talk about kind of the gaps there are in investing. So you can see here, this is data from Pew from earlier this year. There's significant gaps in investing based on socioeconomic level and also race and ethnicity. And these are real challenges that I believe that, we need to work to close. And so you can see here that, the differences by race and ethnicity are particularly starking. And you also see big differences in age, which makes a little more sense. Maybe if you're younger, you might not have kind of started investing yet. But you can see here that young people under the age of 35 are less likely to invest and obviously have smaller amounts in their holdings. But these are things that technology and platforms like Public are helping address by making investing much more accessible to more people. And so if we look at kind of the S&P 500, which is an index of generally how the market is going, over the past decade, it has increased by nearly 200%. But kind of the big piece to keep in mind is that not everyone is a part of that. And so when you kind of hear things like, oh, the stock market's on fire or the stock market's increasing, it really only impacts the small subset of people who are actually invested in the stock market. And so that's important to think about when you think about, is the stock market and the economy the same thing? They're two different things because not everyone has direct access to the stock market. And so again, you can see here with these gaps. And then there's, of course, HerCapital has the same stat on their website. Women invest 40% less than men on average, which when I first encountered this stat was quite shocking to me. But if you think about it, it's not all that surprising because this is an industry that has been very homogenous for a very long time. This was just a quick YouTube search I did of investing and stock market related videos. And these are all the images, as women you grow up with. I remember growing up and I couldn't see myself in some of these advertisements and commercials or even movies. And these things are changing, which is great, but kind of important to consider the psychological effect that can have is not seeing yourself represented in these experiences might have the effect of thinking that's not for you. And I don't know if you guys feel the same, drop it in the comments, but sometimes I think back and that definitely affected me personally. But the interesting thing about all this is, women investing 40% less than men, that doesn't mean that women can't be amazing investors. In fact, these are two headlines I pulled from recent articles. The first is there was a study from Goldman which found that female fund managers were outperforming men this year. And another report I was reading was that the report found that women earned 12% higher returns than men when it came to individual investments. And there were different reasons why that, this study was kind of pontificating why that was true. One was that I thought was interesting is they found that in their study, women had kind of a more holistic view to investing. They saw it as part of their overall financial well-being, right alongside budgeting, right alongside managing debt. And it was kind of part of a bigger picture. And because of that, they tended to be less risky about their investing style and more strategic. So of course, these are generalizations and not true for everybody, but I thought that was interesting in the context of things. So why has the stock market been a scary place for people? Why aren't more people investing? I think it kind of boils down to three big things. One is a lack of economic accessibility. So historically, you needed a lot of money to even start investing. Before there were apps like Public, you needed to have a person doing it for you. And usually they wouldn't invest for you unless you had a great deal of wealth. And then you were paying fees to that person on top of that. A second one is the psychological aspect, like we talked about, feeling like this isn't something that's for you, being intimidated. And a third is a lack of financial literacy, which can also cause intimidation, feeling like these concepts are too complex for you and feeling like you're never going to get it. So these are the three big things that we're trying to help tackle at Public. The first one that has changed is this idea of economic accessibility. So obviously with technology and these kind of new brokerages coming onto the scene like Public, fractional shares have been a big deal. And the way you can think about this is, in the past, if you wanted to buy into a public company, you needed to have enough money to buy a full share of stock. And so I think right now Amazon's around $3,000 a share. So if fractional investing didn't exist, you would have to have $3,000 in your bank account to invest in Amazon. Now, Amazon is a high-performing stock. I'm not giving advice, but a lot of people want to get in on that stock. So what fractional does is makes it so no matter where you are in your economic journey, you can actually own a piece of that company. So it's a slice of a share. And these slices are available in dollar amounts. So if you have $10 that you want to invest in Amazon on Public, you can do that, and you will then own a portion of a share. This is really cool because I think part of it is, yes, you want to get into, people want to get into the market early on. The goal is to build wealth over time. And obviously, the more you put in, the more potential upside you have. But with slices, you can actually start learning in a very hands-on way, which is great. And so part of that is just over time, the sooner you're in there just learning, even if it's not a great deal of money, you can have that educational experience. And then on the subject of financial literacy, we recently did a study with 3,000 investors and found that a quarter of them said they turned 30 before they learned how to invest. And so again, this isn't something that's taught in schools. I personally believe that it should be. I learned how to operate a saw in 8th grade, and I was never taught about debt or credit or investing really outside of an economics class. And so this is something where when people feel like they get later in life or they're in their 20s or their 30s and they haven't started yet, you kind of have that fear of you don't know enough, you're behind, and that could maybe stop you from wanting to get involved. And building on that, the study we did also found that 50% of people taught themselves how to invest. So self-taught, and that's most people. Other people said they learned from friends. A small fraction said from their parents or from a coach, but most people are doing this themselves, which, that's a lot of stress on you, not knowing where to go for information or insights. That's why what HerCapital is doing is so great, providing a resource for this information and connecting with people who are looking for it. But again, if you feel confused about where to go, don't feel like alone. Everybody feels this way because in the past, there just wasn't a really formalized way to learn this stuff.
And Katie, I'll add one thing there that I personally found to be a very interesting stat, which is that more than 60% of women that are non-investors find financial education information online extremely difficult to understand. Yeah. So what that means is even if you've gone past all the hurdles that Katie just mentioned and you decide you want to invest, one, you've never been taught in school, and two, if you do want to learn, most of us feel like we can't understand the resources that are out there, which is why what she's going to say now is even more important.
Yeah, exactly. I think if you look at some of these traditional kind of formats for learning, sometimes it's like reading a different language, and it's not about dumbing things down. It's about making them accessible to people. And I think you'll see resources like HerCapital provides. It's giving you great education, but it's doing it in a way that you can actually digest. And I think sometimes in some industries, people kind of perpetuate the complex terminology almost to keep people out or make it seem like, other people can access it. So I think it's great what HerCapital is doing there. And I think, again, with the financial literacy, it's there without having clear education. Sometimes there can be confusion. So one thing that comes up all the time is if I talk to a friend that's, not investing, is they think, oh, I need to have 2 monitors. I need to be watching the stock market all day. That's too much for me. And what that kind of boils down to is kind of a misconception that the day trading sort of style of investing is the same as long-term investing. And they are really kind of 2 different things, even though you're technically investing in the stock market in both cases. Trading is when somebody has a more short-term mindset. They are looking to make quick gains and flip stocks or investments very quickly to make money. So because that they're playing in the short term, the day-to-day level of effort is quite high because you're watching kind of these fluctuations and reacting to them. And also because it's short term, it's generally riskier because in the short term, a stock could go up and down and up and down. But maybe the line goes like this in a day, but over many years, it's going like that. And so, you only realize gains or losses when you sell your stock. And so if you're doing that quick flipping, you stand to expose yourself to a little more risk versus the long-term mindset where, okay, you want to build your wealth over a long period of time. Maybe the stock's going up and down in a shorter interim, but you believe that that company is going to go up in the long term. And so the day-to-day level of effort is lower because you're not as concerned about those little fluctuations. You're concerned about the big picture of the company and whether you continue to believe in it. And because of that, long-term investing is generally a safer investment, although obviously no investments are without risk. But this is an important consideration to think about as you go between the two. And Marianne asked the question here. Yes, like there's always risk associated with investing, right? But with longer term, again, you're not exposing yourself to those fluctuations in a shorter amount of time. And so if you're really looking at the long term, it's, experts would say it's technically less riskier, but there's always risk. And like I just said, it's, when we show the chart of the S&P or the Dow Jones going up over many years, you might have seen the memes that say stocks only go up. That's kind of a play on the fact that over time, yes, the market has gone up over time, I think 10% annually on average. But that's the full aggregate market. And so within there, you have certain individual stocks that some go up and some go down. So Peloton this past few months is going up because the exogenous forces due to the pandemic have accelerated at-home fitness trends. Other companies like retailers like Levi have been a little more shaky because, again, impact of COVID on people's economic circumstances, people maybe not going to the mall as much. So again, like if those charts that show aggregate going up, individual stocks can go either way. And so that's why a financial advisor would say, only be willing to invest what you might be able to lose. Obviously, the goal isn't to lose, but it's, not every stock goes up all the time. And again, just looking at the time horizon. So just so you have the visual, this is a 5-day time horizon for the Dow Jones Industrial Average. It is, you can see the squiggles going up and down in over about a week. But if you look at it way over the course of time, you can see the trajectories up. If you notice that big drop, that was in March when the pandemic was really starting to take hold. It's since recovered. And so again, if your time horizon was very narrow within a short period, you might have really felt that, versus if you're someone who's thinking long-term, multiple years, you're more in a better position to kind of ride out those bumps. And again, on the financial literacy front, another thing people always ask is, if I start investing, am I going to be kind of looking at financial statements all day and using that as the only source to make my decisions? We actually asked investors in our survey what factors they consider before choosing to invest in a company. And the financials are very important, right? Those are going to tell you the health of a business overall. What's their revenue? Are they growing? Are they not growing? Are they losing money? That's all really important. And that's kind of a piece where, yes, looking into resources about what some of these terms mean and understanding them is really, really helpful and important. But beyond that, people also consider other things. So one would be the products. Are they meeting a real consumer demand? Is this company innovating? Maybe they acquired another company that now they have new capabilities. Trends in an industry really can impact. So if you're very interested and knowledgeable around advertising or digital technologies, that might be a place you want to invest because you have expertise to kind of assess those opportunities in a way that maybe someone else doesn't. Values is really important to a lot of investors, especially young investors. So that could be things like, is maybe you really feel passionate about clean energy and you want to invest in clean energy stocks. It could also be what you don't want to invest in. So I personally didn't want to invest in companies that employ prison labor. And so I did some research to ensure that what was in my portfolio didn't reflect that value that I have personally. So everyone will have their own personal values, but they do come into play. So if you hear terms like impact investing or values-based investing, that's what this is. And then another one people cited was leadership. Are they inspired by the leadership team or the CEO? Do they trust that person? That can really weigh into if you invest as well. So all these things can come together in your decision making. And I think the point is the way you're weighting these different things will be unique to you. There's no one right way to do this. It's really an aggregate of a lot of signals and data points that you collect when you make your decisions. And so in that sense, smart investors are a lot like detectives. You're really looking for what is the information available to me that will help me make an informed decision. I'm going to scan for questions real quick because the next part's the demo. Okay, let's see. Are there any indicators that we should be on the lookout?
You found it. I was
yeah.
It.
Yeah, this is probably one for like a true financial advisor. I would say nobody can predict the future. And so, you hear people talking all the time. If people could predict the future, then they would be very wealthy, running webinars like this and probably charging a lot of money. So it's what you see with even conversations now when there's a dip in the market, you see people relating it to past historical events or similar situations and trying to predict, okay, this is what happened before. We are in very unprecedented times right now. So nobody really knows. What people do know is that in the history of the stock market has been very resilient. And so over time, there's been dips, during recessions, during wars, in even earlier this year, and it has always recovered. But what anyone will tell you is that the past performance of the market does not guarantee the future results of the market. And so that's why that kind of, if you're a long-term horizon, you believe that these trends will continue at a macro level, you're maybe not worried about the dips as much. What we saw in the app in March when you saw that dip was we had a lot of new members join our app because they saw that as an opportunity to buy some of the companies they believed in at a little bit of a discount. But again, how you time that is really up to the person. Like it's impossible to know where the bottom is. And so I think people were just banking on a long-term mindset. If you really believed in a company like Apple, for example, and again, I'm not giving advice. People who believe in Apple think Apple's going to be around for a long time, even through this tough year and this tough environment. Someone who believes in that company long-term thought, you know what, this will go back up and I'm going to get in. And it recovered so far this year.
And then the only other thing I'll add, Katie, I think that's a really good point, is that if you diversify the investments that you have, that's another really great way to not have to worry about figuring out every single, like if you own only one stock, then you're more worried about whether that stock bounces back, or you can't hold the stock long enough for it to bounce back. So to Katie's point, and we like to say this at HerCapital, time in the market is more important than timing the market. So try to hold on as long as you can. And one of the ways in which you can hold on for longer is if you have more stocks or more companies or just a more diversified portfolio.
Yeah, that's a great point. That's something I actually experienced firsthand this week. I had a lot of tech stocks in my portfolio, and those, during the first few months of the year were doing great because a lot of those companies were benefiting due to the pandemic. So companies like remote software tools, streaming platforms. as kind of people were at home more, those stocks performed better. And then, last week when we had the positive vaccine news, you saw a drop in the tech stocks that had gone up and a rise in kind of some of the more analog stocks. And so that's a great point to have like a mixture. And there's a lot of great resources on kind of how to diversify. But basically the way to think about it is if something were to happen to a certain sector, like retail, you don't want to only be in that one sphere necessarily. Because if something impacts one area, you want to have other areas that won't be impacted, or maybe other areas that might positively be impacted. And so that's why the diversification a financial advisor would tell you is important too. With that, I'm going to show you guys the app. Feel free to keep dropping questions. If other things come up, we can, at the end, we'll save time. But Public, we like to say, is a whole new way to invest. How are we different? Financial accessibility with the fractional investing. We have the ability to buy, like I said, the stocks by the slice right in the app instantly. The psychological accessibility. So we're really changing the culture of investing. So very unlike the YouTube video clips I showed you earlier, it's a diverse community of investors. There's people in there that it's not reflecting kind of the stereotypical Wall Street culture. It's a mix of people from different walks of life, different backgrounds. Our app is 40% women. So it's a different vibe in there. And also there's built-in education that's delivered in a fun human format. And we do that through the social layer. So getting started, again, use the link that's on the YouTube page. But the app is free to download. There's no commission fees. So a commission fee is when you invest in something. In the past, there was a fee associated every time you invested. There's zero commission fees and there's no account minimums. And so what you do is if you use the link, that'll be the link that'll give you the free slice of stock. Someone asked about the Social Security number. We do have to get that information. All brokerages do. It's a regulatory mandate. It basically allows us to verify exactly who's using our platform. And that's a requirement across any investing service that you use. But the onboarding doesn't take too long. We actually, after you kind of set up your account, we'll have you pick some of your interests so we can help populate a feed. So when you get started, there's content already in there. And when you get notified that your account's approved, you'll see that the free stocks life will appear in the gift tab.
And Katie, we were just getting a question around whether non-U.S. nationals can, if Public is open to them. I'm guessing it's a no because of the Social Security, but
yeah, it's for right now. It's just U.S. residents 18 and up.
Got it. So if you're living in the U.S. and you have a social, even if you're not a national, you could potentially get Public.
Yep.
Okay. Okay. And then for everyone that's tuned in today, I did just post the link to download the app in the chat as well. So it's in the description and also in the chat. And you can use that link to download the app. And you should see a $20 stock slice as well when you download using that link.
Yep. And I see Caitlin here asking if it's individual stocks or ETFs. We have both. So an ETF is just a bundle of stocks. It's kind of like a fund, but the difference is you can buy it as you would a regular stock. So you can buy into an ETF fractionally on Public too. If there's an esports ETF you want to get in on and you want to invest $5, you can do that on Public. And I'll show you a little bit about that in a little bit. Oops, I think I skipped one. Oh, okay. So the other thing is, like I said, we're creating a different vibe. So when you actually onboard, one of the first things everyone goes through is a quick tutorial on what's the tone of the community and how are people expected to behave. It's so important to us that we maintain a positive and productive environment. And so, it's a place for sharing quality and factual information. We encourage people to share sources if they're sharing information, and also ask questions, have discussions and debates that can unlock ideas and new ways of thinking. It's not about necessarily copying someone else's trade. It's about learning from how other people are thinking about their investing decisions. And maybe you'll think about yours the same way, or maybe there's just nuggets of wisdom that you can take and apply to your own to your own investments. Again, always show respect for fellow members. Respect is key. We can disagree on ideas, but we like to say argue the idea, not the person. And this just helps maintain a productive place where we can all learn together. So the fractional investing looks kind of like this. It's, pretty intuitive. You pick the dollar amount you want to invest in the company. You can set a custom amount. So those are kind of the even numbers in there. But if you had $11, you could invest $11. You could go down as small as $1. And so, maybe you're just getting started and you want to, build a little portfolio with $20. You can buy 20 different stocks and get the $1 slices and kind of have that experience. And kind of grow your portfolio as you build your confidence over time. And again, just having that firsthand experience and ability to educate yourself, even if it's a small amount of money, I think helps a lot of people just get started. So they have more time and more experience so that when they are ready to invest more, they're feeling more confident. So these are some of the people in the app. We have a lot of amazing members, but as you'll see, these aren't all, the types of people you would see on CNBC. And that's really, I think, important. If you think about having a more diverse community isn't just kind of a good thing to do or the right thing to do. It's actually, we think it's beneficial to our members because you can learn from people who have expertise in different areas. And so we have, Haley Sachs, who's a financial influencer in there. And obviously she's really deep in this space. But we also have Katie Storino, who is a beauty founder and has a prominent style blog and is really interested in certain areas. Adrian Grenier is in there, who's an actor, but he's super passionate about impact investing and climate change and has a lot of experience about the companies that are doing work there. So the idea is really, let's get people from different perspectives in here talking about the things they know, and we can learn from everybody, not just the types of people you would traditionally see in an investing community. And what's really cool is that I just think the democratization of interest in business is accelerating. So even you all being here interested in part of the HerCapital community, these are great trends. People are really, really excited to empower themselves, to increase their financial wellness. People have a bigger interest in business news than ever before. This stat really blew my mind. I was reading an Axios article earlier in the year, and they found that finance and business news was the fastest growing category of news, which was, above sports, celebrities, politics at the time. I don't know if that has changed, but this is information people are hungry for, and they're looking to experience it in a different way. So sorry to the Kardashians, but people are really thinking that business and financial trends are cool, which I think is great. These are interesting topics. We experience these companies and businesses in our everyday lives, in our work, and it is interesting to kind of dig in and learn more about them. And people also are kind of flipping the notion on its head that it's rude to talk about money, especially young people. They're much more transparent. Our study found that 64% of Gen Zers talk to their friends about finances. I grew up in a household where we were always taught that talking about money was rude. This is a little different. It's about sharing knowledge. And you don't have to talk about the dollar amounts even. It's about kind of just talking to your friends over brunch about different ideas or asking questions and being more open. And that's really what Public's trying to create in the app, a way to talk about finance in a way that's accessible and open. And one thing to call out too, in the social aspect of the app, when you share an investment, there's no dollar amounts there. And so you don't have to worry about kind of people judging you for what you're investing. It's similar to Venmo. It's just showing what you invested in or what you sold. That's it. So everyone kind of has an equal voice in the platform. And I wanted to share an example of sort of the type of language, just speaking to accessibility and talking about these topics in ways that a human would talk about, not necessarily a talking head on CNBC. This is one of our great members. Her name's Tiana. She's a podcast host. But I love how she's talking here about her long-term portfolio, which is the section of your portfolio where you're keeping the companies you really, really believe in and that you're going to hold on for a really long time. And so she's describing it as if the companies were hanging out together, but she's still sharing kind of the why behind it. And I thought this was a good example of a representative conversation you'd see in the app. Take a sip of water real quick. Another thing that's really cool about the app is chat groups. So if you think about the feed, it's kind of a free-flowing stream. There's different conversations happening. The feed is great for discovery. A couple of weeks ago, I was scrolling and I saw someone had invested in Crocs. I had no idea Crocs was a public company. I don't know if this surprises anyone else, but I'm always finding companies that people invest in that I was like, I had no idea that was a public company. Or someone will talk about a trend or a company I hadn't heard of, and now it's on my radar, and I got that just kind of by scrolling. So discovery is great in the feed. If you want to have more dedicated conversations, you can create your own chat groups. So I have a couple chat groups with some close friends where we talk about our investments. There's also bigger chat groups that are like sub-communities in the app. So one of my favorites is the Women in Money group that we have. And as you can see in this example, the things we talk about are much broader than just stocks and investing. So this conversation was about if we had any female role models growing up that taught us about financial topics. And there was a really great conversation that flowed. Somebody said their mom was in charge of finances growing up, so that was her role model. Other people said, neither of their parents were role models, which is why she was so motivated to teach this stuff to herself. Another member talked about how the pride she felt kind of being the one to show her little sister these concepts about money. And so you can have these kind of side conversations, and they go beyond just kind of the stock market chatter that you might get in a different type of community. And this is kind of the main sort of interface. There's lots of different views, but you can think about it as one side is a snapshot of your own account's performance. We'll show you kind of your biggest movers. So if you have stocks that are going up significantly or down, there's a summary of those there. And then right below that, you have a feed. You can also tap in, obviously, into the portfolio and see your dollar amounts and tap in and get more granular view. But this is kind of the initial view you have. So it's a mixture of your performance, but then it gets right into the social feed, which is, again, so important and so helpful for education. There's also a feed where you can just see how the market's doing overall. So you can just see, is it up or down over the key indices? What are some of the companies that are moving up or down? And that's great just to get like a eagle eye view of what's going on.
Thanks, Katie. And we're seeing a lot of positive comments on the Public app. So I'm so glad you guys have started to download it. One question we did get that I wanted to quickly address, is there a way to make the credit work if someone had already downloaded it prior to getting the link?
Yes, email me, katie@public.com, and I could help you out.
Awesome. She's like our fairy godmother. Yeah. Thanks, Katie.
Sure. No worries there. I'm happy you were so eager to download it. You went ahead and got it. That's great. On the portfolio, one of the cool things that we have is this long-term portfolio, which I talked about before. And so you could actually drag down the companies you want to keep in a special area. And those are for the companies you want to hold on for a long time. And if you go to sell that stock or a piece of it, we'll remind you that you had set a goal to hold on to it for longer. You can, of course, still choose to sell it, but it's a good way to kind of map out in your mind the more midterm kind of investments you have with the longer term ones. And as you build your portfolio, this is just an example, after you invest in something, you are invited to share the why. Again, you don't always have to share. If you want to invest in something, you can mark it private. You don't have to post to the feed. But the feed is a great place for learning. And as people share their whys, you can kind of have these great educational conversations that helps you learn more. So I wanted to share a recent example. I invested in Elf Beauty. I personally saw them growing really fast on social media, especially TikTok. I use their products a lot. They're super affordable. So again, I'm not telling you to invest in this company, but that's kind of like how I shared the why. And I had people kind of pressure testing me in the comments. Maybe some people disagreed, other people building on it. And a great conversation flowed from that where I was able to learn and other people were able to learn as well. I see a question.
Katie, one thing I'll say, I think I really love that you're making it conversational, because people talk on Facebook or Instagram about politics or beauty or fashion, or their pets. And I think, money should be no different. And so I think it's really great that you don't have to be a finance bro to talk about investing in stocks and companies that you like. So for all the women and men on this event today, that's if there's one thing you guys take away from this, is that this is meant to be an easy social thing, and you can slowly build confidence that way.
Yeah, that's a good point. And I think just going back to kind of the vibe in the community, I think in some platforms, the goal is to kind of show off. Either you're showing off your gains in a screenshot, look at how much money I made, or trying to kind of posture and be seen as the smartest one, right? Public is really not like that. I will post a question sometimes that, hey, I don't know much about this specific sector. Does anyone have any insight? And it's a place where you can feel comfortable asking questions. You see it all the time, especially with our more experienced investors. You'll see maybe they use a term in their post, and then someone will say, hey, can you break down what that means for me? And people will answer. And so that's kind of the tone, and it is very different than other kind of investing communities where the tone seems to be more about showing off or appearing to be the smartest instead of being collaborative and learning together. And so, yeah, if you have a public portfolio, another cool thing is that you can have it automatically generates a web page that shows your portfolio. So these dollar amounts are the share prices. That's not how much money I have. But it's almost kind of like a reflection of kind of you and what you believe in. And so if you go to public.com/KDP, you can see all of the things I invest in. Again, it won't show you the dollar amounts, but it has my bio. It'll show my recent posts. And a lot of our members will put this link on their social media, or we even saw someone put it on their LinkedIn, which was pretty cool. They made their title investor on public.com and linked. And another cool thing is if you share that page and someone signs up through your page, you get a free slice of stock too. But I think this is a kind of a cool sort of freebie you get as part of being a member of Public that a lot of people love. I did see a question here about investing in private companies. So Public right now is just publicly traded companies and ETFs. There's a platform called Republic, where you can invest in private companies and startups, and we're friends with them. They're great people. So definitely check out Republic for that use case. Someone asked about the free slice. So what you would do, so the free slice is $20. You can apply it to one of, I think, 9 sample companies. After you choose your one stock, after it settles, then you can sell for pieces of that for whatever you want. So say you apply your $20 to Amazon. Once that trade settles, you can then sell $19 worth of Amazon and split up the rest elsewhere. So that's how you would divvy it up. Is there a way to see from a profile how advanced that person is with investing? There is not. Usually you can tell in their posts, in their content, who is more kind of in that world and has more expertise. But we don't really rank people in that way. It's really about the content. And so I think a positive of that is by not kind of ranking people by their performance. There's a lot of great people in the app who are sharing content that isn't just about investing. So maybe it's about more holistic personal finance, and sometimes they post great content around budgeting or how to understand business terms or how to read financial statements. So it's much more, you see the people who have the most clout are the ones who are sharing the most thoughtful content and engaging with people afterwards. Can you sell stock on Public? So yeah, once you own a stock, you can sell it. So it's not just investing. You can obviously choose to sell if you'd like. So that's also available to you. I'm going to hop back to the deck and then I'll go back to questions as they roll in. Another thing in the app that we do that I think is really cool is safety labels. And so these are labels we place on stocks that might be a little bit riskier according to the SEC. So Public is a brokerage. We don't give investment advice, but we do, want to make sure that novice investors have the full context, especially if there's companies that might be risky. So we looked at a trusted third party, the SEC, and what they said might be risky stocks. One of those would be a company that had recently filed for bankruptcy. They say that is potentially risky because if the company ends up going under, you're more likely than not to not have any value in your investments anymore. Other examples are what's called microcap stocks. Those are just really small stocks that have low share prices and tend to have more volatility. And so there's a couple other examples. So if you're in the app and you hear a stock, or maybe you read about one in a blog and you tap in and you see that label, we'll give you the context in this screen you see here. And we ask you to swipe that you have acknowledged that you read it and have the context before you proceed with your investment. You can always invest in these companies if you choose to, but we think it's important to give people the context. Another great feature, if you're new, is the Explore tab. So the Explore tab in the app is the magnifying glass, and you'll see here there's curated lists of stocks and ETFs based on themes. And so, sometimes if you're reading a financial publication, you might hear about a sector. And that's great. It's great for that industry. But the way we see it is people don't really experience the world in these financial terms. They experience the world in terms of the things they're passionate about or their own values. And so we've built these themes to kind of organize investment opportunities around what you might personally care about. So Meatless Revolution has a bunch of companies that are innovating in vegan food products. Combat Carbon has clean energy stocks and other companies that are kind of leading the charge there. Women in Charge is one we curate. It's S&P 500 companies that are led by female CEOs. So if that's important to you, you can browse those. We're always hoping that list is getting longer and longer and longer. And again, like fighting disease, biotech companies. So I think there's over 30 themes. You can tap into them. Add stocks to your watch list. Sometimes I'm exploring new companies and I want to do more research, but I'm interested. Just tap the star, you add it to your watch list, have it on the radar. Once you add something to your watch list, we'll actually pull in news articles about those companies so you can kind of continue your education before you choose to invest. So I highly recommend the watch list for that. We kind of talked about ETFs, but there's a theme in the Explorer that is just full of ETFs. Again, these are just baskets of stocks, and the baskets of stocks are designed to mirror a specific index, industry, or trend overall. So you can have an ETF that mirrors the overall trend of the market. You can also have an esports ETF. One of the famous ones is called Nerd. And there's also a gender diversity ETF called the She ETF. And so check that out if you're interested in ETFs. That ETFs basically enable you to invest in directionally something you believe in, but maybe you don't know which specific companies are like the winners there or the strongest. ETFs kind of allow you to spread that across multiple players in that space. I recently invested in a clean energy ETF because that's something I believe will grow over time. Now, I didn't know enough to know which individual companies. So the ETF was the option that I personally went with. And then, we like to say investing is better with friends. And so there's a gift tab in the app. There's lots of ways to earn free stock. If you use your share link, which is right in that tab, and you invite your friends, when they sign up and are approved, you'll get a free slice of stock for every person that you refer. You can also connect it right to your address book to easily find people to invite. And also you can earn free slices if you invite people to a chat group or share your trades in social media. I'm going to show a GIF of the social trades because I think they're really cool. So we actually allow you to create a beautiful IG story in just a couple taps. So this was an example from earlier. So we see a lot of members sharing their investments to IG. Again, making this stuff more human. It's really fascinating whenever I share something like this. My friends want to talk about these subjects. People are really interested. And so again, this is just bringing it into a format that people can understand and people can engage with. That feels a little different than maybe someone sharing a screenshot of a stock chart. So some quick parting thoughts before questions. If you're just getting started, what most financial coaches and advisors will tell you is start with your goals and start with the why. It's like anything. Think about why you want to invest. What's your time horizon? What are you investing for? Is it for retirement? Is it for something more short term, like a property or a home someday? Think about kind of why you're wanting to invest first. Another thing that coaches will say is audit yourself, kind of understand what level you're ready to invest at. And again, with technology now, you don't need thousands and thousands of dollars to start investing. If you're curious and you want to learn, maybe you want to build a portfolio with $50 or $100. And now that there's fractional slices, that's something that's available to you so you can learn, even if you're just getting started. So again, starting small, something people love about the app. Another thing is just think about investing in a sense of collaboration over competition. I think like the culture we talked about, it's always kind of these sharks. There's people, having secrets or inside information or not wanting other people to be in on their stock picks. I think we're moving to a place, at least in the longer term investing space, where getting these ideas out in the open, talking them through to other people, we can all get smarter together. It can be a collaborative and educational experience. It doesn't have to be super competitive and sharky. And again, like you can build your confidence over time. So a lot of people say they get started by investing in things they know. And that's how I personally got started. I work in marketing and advertising, so I know a lot about how digital advertising works. And so I started my research in the companies I knew about, and then was open to hearing from other people in the areas that I didn't have as much knowledge in. And with that, I definitely would love to give you guys hats. So let me know what you think of the app. If you try it out, send me an email, give me some feedback. These Invest hats are really popular. So let's keep in touch and send me a note there, and I'll get you in the list for a hat. And with that, I would love to take any other questions people have, things I might have missed. Somebody asks here, are dividends automatically reinvested? Yes, that is an option you can tap into in the app. I personally do that. And that just means if you have a stock that's earning dividends, you can choose that those are automatically reinvested into that investment. So a lot of people take advantage of that.
Katie, we had a question earlier when you had mentioned ESG, and someone was asking if there's an easy way to see which companies are socially responsible or if you have to do deep dive research.
Yeah, for me personally, like there's a lot of curated lists and resources if you know specifically what you're looking for. For the other stuff, in terms of researching what you know you don't want, that requires a little bit of digging. But I will say the internet is an amazing place sometimes. There's great information out there. So, I mean, Google is your friend, but it's the two kind of things. One is finding those groups of companies that you believe in, whether it's, low carbon footprint or sustainable. And the other is knowing kind of you personally, what you don't feel like aligns with your values, and searching out resources to make sure the companies that you own aren't there. I think one thing I experienced, when I was investing in a 401k for a while, is that I never really kind of peeked into what was in that fund. And when I did that exercise, it was really enlightening to see some of the companies that were in there, because they were companies that I didn't personally feel great about investing in. So if you have a 401k, like definitely look into that, go under the hood, see what's in there. And yeah, the research piece, it's, it could be a little time consuming, but honestly, there's so many great resources out there. It's fairly easy to find.
Katie, another question that we got through our social media earlier today was, what's the best strategy for someone who wants to be more of a hands-off investor? So someone who maybe is not going to be checking the Public app daily, but wants to invest and then kind of let the market do its thing.
Yeah. So I will say, with a longer term mindset, if you're investing in individual stocks in a long-term mindset, you don't need to be that hands-on. So even at Public, we say we're trying to create daily active investors. That doesn't mean trading every day. It means, to us, that means engage with your portfolio, engage in a way that you're learning, you're kind of monitoring, but you're not necessarily making moves day to day. For someone who really doesn't want to go into the individual stock picking route, ETFs are a great kind of resource there. And then, of course, outside of Public and what we do, there's things like robo-advisors and lots of great products in that space too. But I think that, again, goes back to thinking that individual stocks equals watching the charts all day. I personally, on days, especially if I know the market's kind of volatile, I just live in the social feed and I'm having conversations and I'm not worried about my portfolio because I'm not gonna sell anything. I'm long-term. So it's kind of the mindset of like being in there and engaged and talking and learning, not necessarily just, scrolling and looking at the charts. Oh, is there a HerCapital chat in public?
Yeah, I love that question.
We will make one. Hey, Colette. I know Colette.
Also, I don't know, Katie, if you saw this one, but we had a question around how does it work when I want to sell off part of my portfolio? Are there commissions?
Yeah, so when you sell on standard trades, there's no commission. So you can, once you invest in something and that settles, it usually takes, I think, a few hours or a day. Then you can go ahead and you can sell whatever you want. It goes both ways. So no commissions for a standard buy or a sell. And I also want to call out, if you have a brokerage account with another product or platform, there's a really easy way we can transfer that to Public. And so a lot of people say, oh, like I love Public, but I have all of this built somewhere else. We'll actually do that for you. There's, if you go to public.com, I think it's transfer portfolio. You can start the process and they basically replicate it. And so you don't have to sell things and rebuy them. They just shift it over. And we waive the fees on that. So heads up if anyone has another platform they want to switch over from. Did I miss any other questions in here? Let's see.
We have some that we got on our social platforms. Zabreen, maybe if you want to just ask one more question, and then I know we're running out of time. So perhaps we'll have time for two, but we definitely have time for one.
Okay. Once you get comfortable and learn after fractional shares, is recommended to own full shares. So it really doesn't matter. So it's a portion of a full share of stock. So you just have a smaller piece. Another way to think about it is kind of like Uber Pool. You're going to the same place, but it's a little bit of a different experience. So you have a smaller piece of the stock, which means your gains or losses would potentially be smaller. But it's the same. You're still owning that. You're owning that, a part of that company. It's just a smaller piece. Anything? Should I look in the chat, or are there more from?
I think the chat, we've answered everything. One other question that we addressed this a little bit, but maybe we can get to it again is one, how do taxes work for this type of account? I think that's a great question. And then Katie, the second one is just a little bit about how people should think about investing in individual stocks versus funds, robo-advisors, and 401ks.
Yeah. So the tax one, for brokerage accounts like Public, you will pay something that's called capital gains tax. There's two types of capital gains tax. One is short-term capital gains and one is long-term. If you have an investment you make, and say the share price goes up and you sell it 3 months later for a profit, you will pay short-term capital gains on that because you invested for less than a year. And that rate will vary depending on your standard tax rate, but it will be at the level of what you pay taxes on elsewhere. And so it's higher than long-term capital gains, which is when, say, that same stock you invested in and you held it for over a year and then sold it at a profit. If you held it over a year, it's much lower. So it depends on your own financial situation, but like around 15% on the profits versus what likely would be a higher percentage if it were short term. And so that's to incentivize that longer term investing and make it more advantageous for people to be longer term investors in the market versus shorter term. If you go to public.com/learn, there's a few articles about that. We also have like a calculator if you want to calculate your estimated short-term or long-term capital gains tax, which is a really helpful resource for you there. And then the second question, I think, it just depends on your goals. I do both personally. I like the picking individual stocks for some of my investments because I feel like I can really get behind some of these companies I'm really passionate about. I like talking about specific businesses. I'm really curious about how specific companies are run and how they're innovating. And so that's interesting to me. ETFs are great again, that like you can have kind of like, there's ETFs that match the overall trends of the market, similar to like what a mutual fund might do. Other people, if that's not your cup of tea to do that, there's other great products for it. But I don't think you need to think about it as either or. I have Roth, I have 401k, I have other things in addition to public. This is just kind of part of my mix.
Yeah, I think that's awesome. Thank you, Katie. And I would agree with that 100%. I think that it makes a lot of sense to kind of have a little bit of both or all of them, and then you can kind of experiment and see what makes most sense. So with that, we're actually over by 2 minutes. It's 5:02, so we'll let everyone go. Thank you to the audience for joining. Thank you, Katie, for your time. And I personally found this to be extremely informative, and I'm sure Zabreen did as well. Before we end the event, obviously you can see Katie's handle and Public's handle for Twitter. HerCapital's Twitter handle is @HerCapital Inc. So you can follow us if you don't already, and then also our Instagram handle is @her.capital. So if you don't already follow us, please follow along for bite-sized content, and obviously we have more detailed educational resources when it comes to personal finance and investing on our website, which is hercapital.org. So do check it out if you haven't yet. And with that, have a good night, everyone. Thank you so much for joining.
Thanks, everyone.